Good afternoon, everyone. Everyone hear me okay? Just waiting another minute before we get started. Should be all good. Today we're going to talk about market state awareness. A little bit of awareness in general. Before we get into it, I want to go through the disclaimer. Everything that we're going over today is going to be for educational purposes. The main thing about trading is that you are using risk capital, so you definitely want to use capital that you can afford to risk, because if you can't afford to risk it, you're going to make bad decisions. You're going to make more emotional decisions, and it's just going to not turn out well. So it's best to make sure you put yourself in a situation so that with the capital you're risking is either not your own, or you have it's capital that you can afford to lose, and that is the winning ticket. A little bit about me. I've been trading for over 35 years. Started out in on the floor of the Mercantile Exchange as a runner. It was really literally my first summer job in high school, and I caught the bug, and I'm still addicted. So I've been working with traders since 1984. I started my analytics business, again right off the floor. Got involved with the professional local traders and also the institutions that were feeding the orders to the traders. So kind of started out on the professional side, and been working with aspiring traders as well. To bring them into the business, provide them with a foundation so they can really succeed. So my background's futures, but I got involved in crypto in 2013. You went through, been through a lot of cycles with crypto. So, a big believer in the space. Big fan of Ethereum and Web 3.0 and what the blockchain can do. And so, definitely carrying the flag on that one. And a lot of what we do and what we're going over today in our analytics is really, tools that, empower traders through fact-based methods and self-awareness. So fact-based trading, before I get into it, what is that? Basically trading, making decisions based on objective data and analysis rather than subjective emotion or opinions. Absolutely experience matters in trading. Just playing basketball matters. How long you practice, the insights that you have, but they need to be grounded in truths, and you need to have a fact foundation to check yourself. It's so easy to let your emotions guide you, and also having that consistency. So when you're dealing with a subjective approach, it's not scalable. You're limited. And it really comes down to having a fact check to help guide you, and so you can really leverage. I don't really like to call it opinions. I like to call it intuitive function. Your ability to trade intuitively, I think, is the main power that any discretionary trader has. And how do you get to that state of flow? How do you what's the best way to do it? Well, the best way to do it is if you really know the facts, and your body knows that. Your body knows that if it's a subjective opinion versus it's a truth. And when it's a truth, it can trust it more. And when it can trust it more, it can help get into that state of flow. And when it can't, it basically causes anxiety. So having a fact foundation is really paramount in trading. So we're talking about market state awareness, and the challenges for day traders. The conditions change every day. That's the dynamics. And so you've got your tactics and tools, and how do you apply them when you've got different conditions. And so, having awareness of the market state is absolutely helps to solve that issue. And then your tactics have limitations. Most tactics are, let's say, trend following or fading momentum, and, you're going to get, when the markets don't go anywhere, your trend following, you get chopped up. And if you're doing a return to mean deviation strategy, you're going to get run over in the market trends. So your tactics are limited, and you need to have a quiver of tactics, and you need to apply them in the right states, and that's what we're talking about. And there's this constant uncertainty out there, and having a fact foundation gives you some kind of benchmark to get some clarity. And so we're going to go into some of our trading tools and introduce you to our playbook, which identifies market states, as well as the structure of those states, and how we use Bookmap with that as well. One thing I wanted to get into before, and the presentation, and just kind of awareness of where who you're competing against on the trading landscape, and you're going up, if you are an independent trader or you're an aspiring trader, what are you going up against? Well, you're going up against the pros, and they have a big team. It's football season coming up, so I figured I'd pull out some images. And I'm from Chicago, so there you go. But you've got, the prop trader's got a whole support team. They've got, a strategist, quants. They've got a separate risk manager. They've got a head trader who's looking at kind of the mandate for the whole business, and that's their team, and they're going against you. And so, who's on your team? JS Analytics look to be part of your team and provide you with some of that support. Definitely the quant work. Provide you with strategies and foundation, and give you some tools to help you manage your risk. We are here for you. So market state, what is it, and how do we apply it? Well, market state is the strategy foundation. It's the baseline. To pull out a widely used quote in trading, strategy without tactics is the slowest route to victory. Tactics without strategy is the noise before defeat. That says it all. Most traders are tactic masters. You have these tools, this toolkit of strategies that you use, and you apply it religiously every day, and you've got it down. But what is the strategy foundation? What's the baseline behind that? And most times that's missing. What we're saying is that you need a quantitative strategy foundation for your tactics. So your strategy foundation for your tactics. Your tactics are a piece of the puzzle. Your tactics are the setups. Whatever you base, your subjective, methodologies that you use to make trade decisions. and those setups occur, on, if you're playing chess, your tactics are the pieces, and you're playing the game, but you're playing it on the board, and the board is the strategy foundation. And that's what market state is. It's your it is your foundation, and it's going, and sometimes that foundation is positive, sometimes it's negative, sometimes it's sideways. But and then and if you're if you're at war, what's the terrain of the ground? You're playing a sport. Is it wet out? Basically, how do you adjust your tactics based on the state? So if you only have tactics, it can be frustrating. When you have that strategy foundation along with your tactics, you've got the whole package. So market state awareness is your edge. And your edge is intuitive trading. So what happens, and when you really are in a state of flow, it's the difference between knowing and thinking. If the words go through my brain, I think, I immediately have to check myself. That is one of my triggers that I use all the time. Whenever I think that I know there's an issue and I need to go check my facts, because I should know. I should know what's more likely to occur. And I should know, is my current position in alignment with that or not? Because if I know the facts and I know the state foundation, and I know what's more likely to occur, then I'm able to anticipate. I'm able to anticipate opportunity, not react. That's my big issue with all these indicator systems. It's just you're always waiting for data to go, and you're reacting. You can't succeed by reacting. You have to anticipate what's more likely to occur. Absolutely, you can use other tools to validate your position and add to it. And if they don't validate, tighten your risk up. But in trading, you need to anticipate. You can't react. And this, as Master Yoda said, there is no try. It's just do. If you want to get long, get long. You're executing. You're knowing, you're anticipating, and you're executing. You're not trying to do something. You're doing it. And we've all had days like both of these days. Days where we're negative on the market. And we anticipate an opportunity, and then when it gets validated, we press it. And when we're in the state of flow, we're and have some of the biggest days that you've had in your P&L, they look like this. You don't do a lot of trading, and you catch some big moves. And you just kill it. You had awareness, you had vision, where this thing can go, you were patient, and you held on to it. Versus thinking and trying. You're negative, and you get into your position, covering it too quickly, re-entering, making some money, you're happy, and then you start pressing it. And you end up chopping yourself up and giving it all back. Or just having a slight winner. When you called the whole move. You were aligned for the whole move, and you let yourself give that away. You were just trying too hard. You were overthinking the situation. This is the difference. Knowing, anticipating, and doing. Thinking, reacting, and trying. When you have the fact foundation, keep it simple. Trade with the facts. Trade with what's more likely to occur and execute. Don't think. Don't overthink. So how do we apply market state awareness? And we're going to get into, the actual tools that we use to identify market state. But how do you apply it? You need to clear your mind. You need to remove your bias. You need to know the facts. And this is your mantra every day in trading. Whenever you think something, I think this is going to occur. Because when you say I think, you're really just saying I hope. And when you get those doubts in your trading, in your position, it's a trigger. I use it all the time. I need to clear my, just get the eraser out and just erase everything in your brain. Remove any kind of bias you have. Turn the chart upside down, or if you have to. Just do a reset and then go focus on the facts. What is true? What are the facts? And is my current position in line with those facts? You're getting squeezed on your stop, and you're about to hit your stop. Is it true? Am I in the wrong side? Is my stop good? Yeah, it is. Do I need to, trigger it myself and let the market squeeze me out? No. All the facts are true. I'm in alignment. If that's not the case, and you're not in alignment, and your risk is too great, absolutely. Now you've got awareness that, hey, I need to dance out of this trade. I don't need to wait for it to get filled. It's wrong. Things aren't performing to expectation, and I need to kind of switch gears and protect what I can. And so the big difference with understanding and having market state awareness is it switches from, kind of this might occur to this more likely will occur. What are the probabilities? And then every time you're putting your capital at risk, you should understand what is more likely to occur. And you should understand, is my position in alignment with what's more likely to occur? And if it's not, and you still want that position, because markets, they can turn, when you're playing cards and the dealer has 15 and you have 16 and you decide to hit and you can't hit a 5, but it's not likely that it's going to happen. So, but it can. Things can always happen. That's what risk management is all about. But aligning yourself with what's more likely to occur and understanding the difference between hoping and what might occur, or what you want to have happen, versus what's more likely to happen. And so when we talk about market states, most traders are looking at a market state as it's a trend state or it's a non-trend state. I call these general market state types. I actually added a pivotal to that. I added extremes, but these are more general states. And as you'll see with our tools, we get into a little more detail than just general. Because markets, positive trending market that makes higher move highs, higher move lows, it's a bull trend. And we're going to apply certain tactics in a positive trend state. We're going to, some of those trending tactics will work the same in a negative trend state, but they might be a little different. Most markets, when they make, just move negatively, a lot of times, that's a little faster than the upside. Maybe not crypto. But they both have their nuances. And they definitely have their nuances when you go in, if the market's in a non-trend state, or if it's pivotal, or if it's at an extreme. And so this is where we go into, we need to adjust our tactics. So having that awareness. And just because a market's in a bull trend or a bear trend or a non-trend state, you know, if it's in a bull trend, doesn't mean it's, you know, you come out and you're just buying it. You know, positive trends have pullbacks. Markets aren't linear. But the important thing about market state to understand is it's the foundation. It's the playing field. Bottom line. And having that awareness that we're on this field. And absolutely, the expectation is that the market is going, if the market is going to perform to expectation, it's going to make higher move lows and higher move highs and trend up. It doesn't mean that this session we're in this corrective phase and the market opens up higher, breaks out to the upside and trades lower all day. It's just part of what a positive trend is. And so that's part of the expectation. And that's the key. What is your expectation? You know, if we're in a positive trend, expectations we're having, you know, the market's going to have positive structure. If it's an accelerating trend, those pullbacks are going to become shorter and shorter. What's more likely to occur? What's more likely to occur is the market's going to trend. And trend following tactics are going to work better. And what trend tactics will typically work better? The buying ones, positive ones. So we're looking to accept buy signals. So, you know, if we have a tactic toolkit and we have, you know, an oscillator system, we have a setup that is to fade markets, and then we have a trend following system. You know, our trend following system is one we're going to want to lean on. That's going to be the one of focus. You know, so if we're masters at all these tactics and we just run all these tactics all the time, we're going to have some issues. So here's a market, and we've got a overbought oscillator tactic, we've got our trend following tactic, and we have our fade deviation tactic, and we're running them all. You know, and when the market shifts into trend mode, oscillators just don't work. You're going to get run over. They're going to get overbought, and they're going to stay overbought, and you're going to sell it, and you're going to get that, you know, run over with that. Same with fade tactics. When you fading the market, we're going to get, you know, we might pick up some little gains, but more likely we're just going to keep getting stopped out because we're fading the moves. You know, we'll pick up some gains on some fades, but we're going to give a lot of it back. But our trend following tactic is going to work great. So if we don't have a strategy foundation, our non-trend tactics are going to lose, and our trend tactics are going to win. And if we have good market state awareness, we're not going to execute our non-trending tactics. You know, we're going to shelve those till the market proves us otherwise. As long as the market's holding that structure, we're going to trade our trend following strategy. And we're going to catch that move. We're going to, you know, participate in that opportunity. And that kind of brings us to the next section of, you know, understanding market state awareness, understanding the market structure, not thinking but knowing. So here's our playbook application, and this is what it's designed to do. Identify market states. So this is what we call our market grid. And for crypto, we're covering Binance, Bookmap, Blockfills, Coinbase, and Kraken are some of the exchanges that we cover. They're all similar, a little different. A lot of most people are involved in perpetuals. The grid's color coded, so the red hues are more negative. So this identifies that Cardano is in a bear trend, and Bitcoin Cash is in a bull trend. Ether's in a neutral digestive state. Doge is in a bear trend correction. Ether pound cross is in a neutral positive shift. So the grid allows you, our grid allows you to really identify market states that your tactics will work best in. So if you're in a non-trend, a general market state that's a non-trend, and if these commentaries, they don't change from one non-trend to the next. They're there to identify what is a non-trend. It's a sideways environment with choppy trading conditions. In this market state, directional moves are not expected to be sustained. So we're not expecting follow-through. Opportunity exists on both sides of the market, but profit potential is limited and should be realized sooner than later. So take your money if they give it to you. Markets that do end a session with a strong directional bias will have trouble sustaining that bias in the coming session without the support of a positive shift in the next section's market state. So if we're making a big, strong if you have a market in neutral digestion that has a kind of a linear one-way trade, typically those are the times with just that exhaust, and the market goes into the next session and just turns around and falls back into neutral. The one thing about neutral digestions, though, and this is important for your tactics, is that they can be the precursor to a breakout. So absolutely, the expectation is more likely to occur is the market's not going to follow through, but as the market continues to coil and digest, it's a precursor to a breakout. And typically, what happens in a neutral digestive state is that when it changes into a trend, it's signaled by an early trend session move with no break in positive or negative structure. So if the market is going to break out, it starts right from the get-go, from the new session. And so for crypto, that's 12 a.m. UTC time. So I'm in Chicago, so that's 7 p.m. Central Standard Time. And during that initial phase, that kind of the first 4 hours of trading, the market makes a decision, and a lot of times you'll see it just starting to build momentum. You can use like a simple moving average just to give you some guidance of, hey, it's building structure, and it just goes. It doesn't stop. It's even mentioned here. Simple moving average is a great tool to identify a possible breakout day, with the expectation if the market's going to scale up or down, it will maintain the trade above or below that moving average. And so that's just kind of a simple tool to use in a neutral digestive state. So the expectation is going sideways unless the market's showing you that it's trending and it's holding positive price structure or negative structure. So it's holding a simple moving average, let's say, and it's been doing so since the beginning of the session. Those are tells as well, not to just step out and fade momentum when the market's in neutral digestion. So the idea with the commentaries is all about giving you nuances, giving you tells. just like a bull trend. Yeah, what's the definition of bull trends? The market's making higher move highs, higher move lows. If it's not doing that, then it's the definition of the bull trend is not true. And that's a huge thing to understand when you're trading is, if the markets are going to tell you if it's true or not true. And one thing about a trending market is if it's true, it's going to hold higher move highs, higher move lows, or for a bear trend situation, it's going to hold lower lows, lower highs. It's going to hold negative structure. And as long as the market continues to hold structure, in a bear trend, further losses should be expected. It doesn't mean there can't be corrective pullbacks, but positive price action is expected to exhaust below the high inflection point that will maintain structure. Simple as that. The things that you know, intuitively or not, this. But you have to keep that, understand that that's the foundation. Because any violation of that break in negative structure is more likely to produce a neutral shift than a positive transition. So if the market isn't staying in its trend mode and we do break the first structure point, what's more likely to occur? We're probably going to have a sideways terrible day. If the market's been trading on the offer all session but has not been able to follow through on any negative breakout, those are situations where the market's making a new move low and it can't follow through. There could be a corrective squeeze into the close. That's typical in trending markets. They've had that big move during the day, and then they can't. Then near the end of the day, they haven't been able to really follow through on their breakout, and you can get those corrective surges. So this is, because if it is going to trend lower, it'll continue to create that negative price structure. So it's all about just being aware of your environment, and that's what the market grid does. It gives you insight into the environment. And literally, this is a book on the coffee table when it comes down to defining what that state is, what the background is. One of the things that this application also does, it gives you additional insight to that state. So, understanding the general context of the market expectation, what type of momentum is expected. So in a bear trend correction, it's a corrective trade. So it's non-trending. So non-trending, that's more sideways. So again, this is like a little more detail than just trending or non-trending. This is a non-trending bear trend correction. So I love market states like this because it gives me the opportunity to potentially get at the initiation of the next trend move. So I search out corrective trend states for opportunities. I'm not anticipating so much momentum, but I'm looking for those squeezes. Because generally, we're in this positive bias of a bear trend, a corrective bias. And so states shift are in constant shift. They're always transitioning from one state to the next. And also the structure of the market can change this tone. So this market, ICP, I like this protocol, is in a bear trend correction. So it's a negative trend. We had a positive signal. So we want to take a look. So now we're going to get a little more detail on this bear trend, and we're going to look at the structure. So we know that, and this is, bear trend correction, it's what I call a signature state. So it's, it's not as basic as just a bear trend. It's a correctant of the bear trend. So it's a nuance. But what is that? But now we're going to take a look at what we call our sentiment bias. And currently the sentiment bias has no bias, and it's located at what we call our directional, which is in the midpoint of what we call our critical range. For us right now, on focused on market state awareness, we're just getting more granularity into the detail of this bear trend correction. So we know we're bear trend correction, but now how does sentiment skew that state? Well, because sentiment has no bias and it's balanced, the market that's in a bear trend correction signature state with the R level equal to the directional is defining the base for any corrective shift. If the market's going to hold firm, it will maintain a trade above here. So this sentiment bias is identifying the price point that says if this bear trend correction is true, the market's going to trade above this price point. And if it's not true, we're more, the market's more vulnerable to reestablishing that bear trend. So sentiment bias is going to skew the market state. It's a real key piece. These two price points, UP and DP, and really the structure is just made up of 3 price points. So if this looks complicated, just focus on 3 points. You got 1 point, the green line, it's like over-under number. Above it, it's positive. Below, it's negative. Well, because if the market's in a bear trend correction, and a bear trend correction is basically has a positive bias because it's a corrective move in a bear trend. That's the expectation. Well, this is telling you where that expectation is true. It's true if it's above this price point. If it's not, we're more likely that we're going to be in this situation where there's the potential for a bear trend correction. So let's go take a look at Ether, and then we'll go to some live markets. I've got that teed up, and then this is also more of a general market state, so it should be a little more straightforward. So we went over the neutral digestion before. It's a sideways environment. Take profits sooner than later. This can be a precursor to a breakout. Coiling action will build power. If it's going to break out, the tell is that the market's going to make a move early in the session. It's going to hold structure. With the market states as well, and with the grid, we can look at the previous period grids. And so, just for fun, we did have a big positive move yesterday, and prior to that, the market was in a bear trend. And so what happened is the market transitioned, and it transitioned into a neutral market state. And as you'll see, as we're getting to talk about structure, the structure point yesterday for Ether was 1652, which was basically telling us in this bear trend that as long as the market's below 1652, the bear trend's all good. Everything's all good. We're negative trend, but if we can't hold below this price point, there's an issue with the bear trend, and we could see a corrective trade. And that's what happened. And so today we come in, and that market did transition. We had a big surge, transitioned above 1652 and rallied, and it didn't turn us into a positive situation. It just turned us into neutral. So we understand the neutral state. So let's take a look at structure and how does that come into play now, and how does that help us give us better market state awareness based on what the structure is. Well, sentiment today for Ether is at 1660. So let's take a look at that structure. So these blue, this is my Ether daily chart. I've got a 5-minute up here. This was yesterday's action, the big surge. So here was that 1652. Actually, like this is an integration that we have. If you're interested in this integration, you can get it with your subscription with us. So here's that sentiment bias yesterday, and we had the the market was in a bear trend, and then when it couldn't maintain a trade below sentiment, it produced this sharp rally, which transitioned Ether into more of a neutral market state. So now we're in a neutral state. I'm going to remove yesterday's action. Yeah, the integration is great. You can kind of get a lot of different views. So here we have sentiment for Ether is at 1660. And so this is our market, what we call our market structure bias. So we have our neutral digestion. What's the parameters that define that digestion? That's going to be the critical range, these 3 price points. And what this is identifying is that sentiment is positive because it's below the market. It's below the market here. So what this is telling us is that Ether is in a neutral digestive state, but the structure bias is positive because the sentiment is below the market. So the expectation is that we're going sideways, but it's a buy break environment. Buys are more valuable than sells because sentiment is below the market. So this positive momentum from yesterday is basically still in command as long as we're above 1660. Those were metric boundaries, kind of the areas of influence around the inflection points. So if you were looking for a trade opportunity, this is the area of signal acceptance. So you're to help with your risk management, this helps to identify a boundary of where your signal, where you can accept buy signals in this. But right now we're just going through market state awareness, improving that awareness, and so the market structure bias, it takes this expectation, market expectation of a sideways trade within parameters, and it defines those parameters, and then it gives you a bias. And so that bias changes, adds a little more granularity to that commentary. And so with the R level, this range between the DP stands for downside pivot, 1680. I'll put the critical range on right now. So what this is saying is this band defines the lower support extreme of this technical state. So anticipate an underlying positive sentiment bias with all trading above this range, this band here. So really any exhaustive signals that come into this area are an opportunity. If the market's going to keep its legs under, it'll base above here with the expectation for a rally targeting the upper resistance band at the UP. So the ideal situation is the market gives us a break to buy into this area with the expectation that we're going to get a move up to this area. Now, a break below sentiment, a break below this structure, then that's going to make this neutral digestion state not true because it's broken structure. And so that would have the market vulnerable to a negative transitional shift. And you can see, this section of the playbook helps to identify risk. So in the current situation, trading here at 1702 between what we call the directional and the downside pivot, we're in this less risk area. Less risk meaning the market has more propensity to go higher. Prices have more propensity to go higher. When we start trading below the downside pivot, which is below this critical range, this area is kind of an actionable area, and it identifies it's kind of at risk, because if the market this is where the market's going to make a decision. Is it going to transition lower, or is it going to stabilize and rally? And it'll do that within this zone. And then if we trade below this sentiment, it puts us in a risk-on situation. This is when the market's vulnerable to negative events. Just as if we start trading above the upside pivot, this makes it more likely that we could have a positive event. Why? Because the market's breaking out of the neutral digestion to the upside, and it's in alignment with the sentiment bias. Versus if we start to break structure here, that's going to tell us that the market is transitioning lower. We got this negative bias. So again, it's just further granularity of what it means to be in a neutral digestive state with sentiment below the market. Since we have this awareness of this is the foundation that that the market's in, and we can even without the price map levels, just having that state awareness. And here is the close, or the at 12 a.m. UTC time. Here's our close, and our backdrop and our foundation is sideways or neutral. So that alone, with the market having this big, strong surge yesterday, we're coming in today and saying, okay, hold on, we didn't transition into a positive or transitional state. We basically just moved ourselves out of the bear trend state and into a neutral posture. And what's more likely to occur is that we're going to go sideways. And so then we can, even just looking at price structure, let me blow this up just a little bit. So if we, market makes a surge, higher high, makes a low, makes a high, makes a low, it's consolidating. We have this price point here. We open up for the new session, and we're breaking structure here, which is a tell, kind of setting up some sideways action. And then when we break structure here, it's a tell the market wants to go lower. Here's the previous day's high, previous day's close, previous day's midpoint, previous day's low. So that was the tell, the setup for the market to basically test the previous day's midpoint. So now if we add some structure to this, we can see sentiments below the market here. The directional is the rotational number within this critical range. So here you had kind of validation. Also here, the market's struggling to, is basically topping out at the metric boundary of the directional. Again, it's just all the different pieces, factual information. This is all quantitative that come together to give you clarity for the moment. And then if we add the critical range, so we're in a sideways situation. We have these additional structure points that help to position manage opportunities within the critical range. So it's kind of a stopping point. Also for a neutral digestive state, as you get more into our work, you'll understand that when the markets do get into a neutral situation and they get this, the part of what happens in neutral is the market digests and coils. A lot of times when they tighten their coil, they will tighten it up within what we call our critical range positive, critical range negative. So right now, that stabilization there, we've got some pretty good definition here at 1692. So I'm going to just, as we kind of close out the presentation, just kind of bring it all together of how we use the market state awareness with the structure and with the order book. Again, these are just, one thing I like of Bookmap so much is that, it's given us the facts of the microstructure. So these are the facts of the macrostructure. We know we're in neutral digestion. We know that this is the low point of that neutral digestion. We know that this is a positive bias. This is our kind of our buy zone area that we're looking for potential exhaustive opportunities. So now we also understand that since we are in neutral and we're more than midway through the period, that this area and the market is stabilizing above the previous day's midpoint, and the previous day's midpoint is a great momentum level. So if we had the big surge yesterday, the market is performed to expectation of the state, so that's what we're, what's more likely to occur. Market goes sideways, it's going sideways. Now, if this positive momentum is going to kind of remain intact, holding above the previous day's midpoint is key, because if it doesn't, it's really going to validate this sidewaysness, and it's going to affect most likely tomorrow's session, that we're going to kind of end the month in a sideways situation. What the market is currently doing right now, it's downshifted into neutral. What did it do? It's digesting this huge surge. As long as we're above 1692, based on just the time frame structure, we're positive. The fact that we're stabilized here above the 1696 CR minus, which is, we're still in this less risk situation, and when you get into our work, you understand that is a validation point to make a move to here, which then you have alignment with the previous day's midpoint. So this is a great alignment that says, hey, if the market is going to rotate lower and give us a setup down to sentiment, this is where it's going to be triggered, below the midpoint and below this metric. The fact that we're stabilizing here above this, what can occur? Well, we can have a rotational move back up to here, and it's still in alignment with this neutral digestive sideways outlook. So currently the two scenarios that are playing out in the current session for Ether is, yes, we're sideways. Yes, we want to take the money off the table when we have it. If the market's going to rotate and coil, it's going to coil within the CR plus and CR minus. That would be a rotational trade of digestion of this huge surge. Makes sense. So the fact that we stabilized here, we would anticipate the market to reject here. So if we get that move up to this level, it's a fade. And as the market transitions above here, there's a more likelihood it's going to make a play for that area. And the other scenario is that and so your risk is defined here. And a failure here isn't so much a sell opportunity as it is a setup for a break to buy. And we can use the microstructure in the order book to give us insight to what's going to occur. So we have the big picture structure, our strategy foundation, neutral digestion. What's the structure of that foundation? The structure bias is positive because it's below the market here. The critical range gives us our big boundaries. We have our minor structure levels within that critical range to help us with this trade. We identify alignment with just general price structure, and this is time frame structure. And now we go into the microstructure of the order book. And here's an integration that we have where our levels are plotted in the Cloud Notes section of Bookmap. So you can see here in real time, and you can see how the liquidity is building up around structure points. And when you see imbalances and liquidity shifts, that gives you insight. Here you've got the VWAP. I like to look at that. And so if the market is, so at the moment, is this market going to transition higher up to 1736? Well, the VWAP can be a good additional insight to that. The beauty of the playbook is it can quickly go to any market. It identifies its state. It identifies the structure of that state with the structure bias. And additionally, it provides you with some key strategy themes. So because we're in the state and the structure, these are the strategy themes. So for each ether, just as we went over, the optimal strategy is to fade momentum into the sentiment and to accept a reversal strategy off the downside pivot. So what a reversal strategy is, the market breaks below the downside pivot. Maybe it doesn't get all the way down here, but then it trades back above this metric, and that's a positive signal. So that's what we call a reversal signal. So this is really where we want to spend our money when we get these opportunities. These aren't the only opportunities for this state and structure, but they are the best ones. The other opportunity was to fade momentum against this on a surge. So basically, what are we doing? We're fading the critical range. We're fading this neutral digestive range. That's the optimal thing to do. And what are our hedge strategies? Well, if the market fails, if the market breaks structure below the sentiment bias or breaks structure above here, then that's when our trend following strategies and tactics can kick in. Until then, it's messy. So the opportunities in a neutral digestive state are at the extremes, which is typically the case. And trading in the middle can be sloppy. There can be rotational trades. And as I mentioned, there is a potential for this minor rotational trade, which is basically just shrinking this range. So your market state awareness, you've got a weapon here to really identify quickly what the context of the market is, what the structure of it is, and what the optimal themes are. And that's your statistical baseline. That's your fact foundation. And from there, that's where you apply your tactics. So if you have any questions, feel free to email me directly at js@jsservices.com. If you want to test drive the playbook, go to jsservices.io and you'll be able to sign up for a free trial. And I also recommend that if you do sign up for a free trial, we will also introduce you to our educational partner, Dharma Capital Trading, and our live virtual trade rooms. But the first step is just to get on trial with us with the playbook. Well, thank you for your time today. Hope you enjoyed the presentation, and we'll see you next week.